Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. Well, the first thing I need to say is Happy New Year to everybody, as here we are at the start of 2016. It's amazing how quickly the years go past. So I'd like to start today's, or even this year's, set of look at MTPredictor with a review basically of how to do multi-time frame analysis, in other words trading with the larger degree trend, and just show you using the YM on a 3 and 15 minute chart as of the last trading day of last year, which was the 31st December, just to show you what a difference that can make and why I encourage you all to learn how to trade with the larger degree trend. So let's take a look. Let's start by looking at our standard and automatic trade setups that unfolded on the 31st. Remember, we trade in the direction of the STF indicator if you're a new trader, therefore red would be down. We had an automatic TS2 sell here. We right mouse click, place the analysis on. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep our initial risk small under control. The market came down to the first target where a nice profit of plus 3.2R was available. Remember, we look at the profits in relation to the initial risk, not just in pure dollars. So a nice trade there. We then had a TS1 sell here, right mouse click, place analysis over the red sell bar into the first target where plus 3.8R was available. That's pretty good. We then come down here, the STF turned black. We had a buy setup, so we'd be taking this buy setup. This one was a losing trade because the market didn't quite get to the 100% initial risk, came down and would have stopped you out. So that would have been a minus 1R loss. Remember, losses can, will and do happen. I'll say that again. Losses can, do and will happen. It's a fact of trading life that every trading system approach will always have losses, but what we do at MTPredictor is keep these losses small. So as you've seen so far, the profits are much larger than the losses, and that's what makes you money over time. Let's clear this all off. Last DP buy here was against a red STF, so you'd have avoided it. So overall it would be 3.2 plus 3.8 minus 1 would have been plus 6R overall, 6R profit on that particular day on the 3-minute YM. So that would have been a good trading day. But let's see what difference it can make by adding in the larger degree trend. For this we go to the higher time frame chart. We look to a time frame between 3 and 5 time frames higher. So if you're trading a daily chart, it would be a weekly chart. If you're trading, say, a 15-minute Forex, it would be an hourly. As we're looking at a 3-minute, we'd go out to the 15-minute. So what do we do here? Well, we put our DPs, which are our decision point levels. These are leading indicators because they're on the chart in advance. They get there before the market even can get there, for areas of support or resistance. We use the prior pivots on the 15-minute chart to gauge this. So as the market was coming down off this high, we'd go back to this prior pivot here, right mouse click, this would have been our area of support. This pretty much held the trading for the 30th, which is the day before, for ages throughout most of the day before it broke down later in the day. Once we had 2 consecutive closes below this, the large trend was deemed down, which it happened just before close on the 30th. The large trend is down into where? We go back to the next major pivot swing low, which as you can see was here, which was the low of the 28th. Right mouse click, put the decision point on again, and that would be our next support level. Remember, that would have been on the chart even before yesterday or the 30th even opened, before the market even started trading. On the 31st, you'd have known that this was a potential support level. So can you see throughout the whole of the 31st, the large degree trend was down, and it was down into that large degree support zone. So how would that have changed your trading? If we go back to the 3-minute chart, there's our support zone. Well, if you've been trading just the automatic setups in the direction of the trend on the 15-minute chart, you'd have still taken this TS2 sell, because that again would have been in the direction of the large degree trend, because the trend was down into this low. You'd have still taken this TS1 sell here, because again the large degree trend was down, but you'd have avoided this TS3 buy setup because that would have been against a large degree downtrend. So the instant reaction there is you'd have kept the 2 profitable trades, you'd have avoided this losing trade here, so that would have avoided the 1R loss, so your profit would have gone up to 7R, which was nice. The other thing you can do is now look to perhaps run the trades further. maybe on this first TS2 sell setup, you could look to try and want to run the trade down into the low there. As the market got into its first target, you probably wanted to bring your stop to break even, so this trade here may well have turned into just a break even trade. Let's take the worst case scenario and say it was. But you'd have done the same with this TS1 buy, sorry, I keep saying buy, with this TS1 sell setup here. So you place the analysis on here. This time the target would have been dragged down to the higher time frame support, and can you see how suddenly this would have then changed this particular trade into a 15R profit. So you may well have had a break-even trade to start, but then a 15R, which is an absolutely massive profit on that second trade there. Can you see that? Again, you wouldn't have been looking at the buy setups, largely your trend was down. So that's purely and simply looking at using the higher time frame support zone. Were there any other reasons why you might want to treat this particular TS1 sell differently and look to run it further? Well, if we go back to the 15-minute chart and we place the Elliott waves on here, so we go back to this pivot high here, we place the Elliott waves on. Can you see how this was a 1, 2, 3, 4, 5? Therefore, we can project down again in advance of where the wave 5 targets are likely to be. So this would be using our WPT tool down. Remember, this could be done even before any of this market unfolded here. So what actually I'll do is I'll just get rid of that, and I'll actually do our training mode just to show you that. I'll jump back to, say, I don't know, around here somewhere. Let's place these WPT zones on for a wave 5. This involves some mouse clicks at the pivots that are shown by the connected lines there. And there you can see the levels are placed on the chart in advance. So this would be the area, the typical wave 5 WPT, of where the market was likely to go to. Turn training mode off, and as you can see, that's exactly what happened. Let's just place the DP off this particular low here, just to see if that was in that same area as well. That's exactly where it was as well. So that could have been a support zone as well. So can you see how the high of around about 1300, so that's 1 o'clock, would have been deemed a wave 4, and the large view trend was down. Remember, we only work with isolate or Elliott wave patterns in isolation. This is my unique view of using Elliott wave in isolation. We only work with patterns that are clear. In other words, when the pattern's clear, we work with it, and we accept that half the time the patterns aren't clear, and therefore we don't even try to place an Elliott wave pattern on the chart. That's where most standard Elliott wave software and gurus go wrong, is because they try to place Elliott wave counts on all the charts all the time. It simply just does not work. Only use the patterns when they're clear and clean, in other words, in isolation. Let's go back to the 3-minute chart and see how that would have changed, in particular, our analysis of this TS1 sell setup. Remember, this here, this high here at 1 o'clock, which was around about here, would have been a wave 4 on a higher time frame. Largely trend would be down into at least this particular DP, if not the lower DP. So now let's place the analysis on, and this would have been treated as at least a holy grail trade setup. In other words, this would have been an important high, this would have been initial decline, this would be an initial correction, which we anticipate to be a wave 2. Therefore, we're anticipating a wave 3 decline, so we go into at least the typical wave 3 WPT. Let's drag the risk reward down, and there you are. At the typical wave 3 WPT, the profit suddenly increased to plus 10R. So can you see, by using the higher time frame, you can not only help filter out some of the losing trades and gauge the large view trend better, or have more confidence in the large view trend, but you can also use it to increase the profit on some of your profitable trades. In other words, you can maximize or increase your targets by use of the higher time frame charts. When the market got down to this level here, you may have well said, I want to now perhaps use the 1 bar high to trail your stop. If you had have done, you'd have been coming out here at plus 13R profit, or you may have said that level there, I want to come out 12R all the way down here at your next support level 15R. Either way, you'd be looking to lock in and very, very nice and big profit. Remember, this is the key to trading success. It's not about having a high percentage of winners, it's about having profits that are much, much larger than the losses. If you do that, you don't need a high percentage of winners to make money, and that makes trading a lot easier over the long run. So hopefully this has been a good video to show you not only how MTPredictor looked at the 31st of December using the YM on a 3-minute and 15-minute chart as an example, but also how to use the higher time frame charts to first of all gauge the large degree trend, and then also to help manage your trades on the shorter time frame, particularly increasing their profit targets that allowed you to run the trades further and as such make some larger profits. So as you can see, it was a very good day for MTPredictor, particularly on the 3-minute YM. The ES also had a good day as well. I'll just go out to the 15-minute chart, but not necessarily. There's the 15-minute chart. There we go, back out to the DP. As you can see, yet again, just the same as the YM. There's the DP on your chart in advance, just as with the YM. That's where the market went to. This particular high here was also a wave 4, so you're looking to then trade on the way down there. There weren't such good sell setups on the 3-minute chart. In fact, you'd have had 2 losing trades there. The best trade would have been on the 5-minute chart. You remember you also looked to trade the 5-minute chart, which is where you had a TS1 sell here. So if you now place the analysis on that, into the typical wave 3 WPT, 6-hour profit, down there into the lower support zone for a 9-hour profit. So the ES also had some good trades, but mainly on the 5-minute rather than the 3-minute. My personal favourite was the YM, which as you can see we actually had some lovely and big profitable trades. So again, a good trade on MTPredictor, and hopefully this has shown you how to use the software to take the trade or take your analysis to much higher levels by using the higher time frame charts, and as you can see that allowed you to capture much more profit and have a very good day on the USD minis, in particular the YM, which was shown here on the 31st of December.